Alexa, unpause. Hey, 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 hey. It's Money Monday. So drop in the comment section what song you're paying your bills to this month. What song are you paying your bills to this month? I want to know what song you're paying your bills to this month. The song that I'm paying my bills to this month is this one. Y'all hear it? That's how I've been feeling. It's April. It's financial literacy month, and you know what it does? It has me really thinking about like where I was when I first began First Empowerment. I'm feeling real rags to riches this month. I'm feeling real rags to riches. Drop me some money back in the comment section if you feeling real like. That's what I'm feeling. I'm feeling it. I'm feeling rags to riches. Let me just get a little bit of the chorus. What you say? Hey, Alexa, pause. So that is the song that I'm paying all my bills to this month. That's right. I turn on music when I'm getting ready to pay my bills because in my mind, I want to think about that every time that I am paying somebody else for a resource that they have given to me. You know what? It creates the energy. It creates the mindset. It creates the abundance for that money to come right back to me, sis. And speaking of money, honey, I want you to open up your spiritual purse, your actual purse, your bank account, your wallet, whatever, because I'm about to give you some money, honey. Yay! I hope that you feel richer every time that you connect with me because I feel richer every single time that I connect with you. Okay, so today we're going to have a bit of a conversation. Hopefully you've seen this policy that's moving around that President Biden is using as, I'm about to use some weird language. I had to catch myself. That's actually the way that the proposal is being proposed is that it's going to be strategically used to close the wealth gap, right? Close the wealth gap as relates to the disparity in dollars when it comes to racism and the ability for people to get, fair access to resources, right? So the policy is saying that it's going to change the way that information is being reported on your credit report to reduce the chances of you not being able to purchase a home, of you not being able to get decent interest rates when you borrow money by way of a credit card or borrowing money to purchase a car, any of those things, right? And that's the way that the policy is being shared, okay? I don't particularly, and if you do hear a little bit of resistance in my voice, it's because I don't particularly get excited about the government replacing the three major credit bureaus because that is one of the largest parts of this particular policy that Equifax, TransUnion, and Experian would now be removed. They would no longer be managing your credit profile. Now, the CFPB would now be used as the governance for all credit information. The reason why it doesn't necessarily excite me is because I think that the government in and of themselves have enough responsibility as it is. I think that instead of replacing the three major credit bureaus, I think that they should come up with some new benchmarks. I think that they should be a lot more forthright about the algorithms that make up your credit report. That's what I think that they should do, as opposed to, changing the hands of that responsibility, especially in the midst of a pandemic where we are economically being, challenged. I don't really think that this is a good time to change responsibilities about who is managing your credit profile at this time. Now, while I don't like that, I do like the CFPB. I'm going to drop that in the comment section for you. CFPB is actually an agency that I use for my clients. So whenever it is that I have been disputing my client's credit profile, and I may not be getting the responses that I necessarily prefer, a deletion, a verified deletion is the is the preferred. However, when I'm not getting the type of support from either the direct creditor, or if I'm not getting the support from the credit bureaus when it comes to getting an error removed from my client's credit report. And right now, there's more than 4 people, tuned in. And so errors on your credit report, there's 1 in 4. So if there's 4 of us just sitting here, then, at least one of us has an error on our credit report. So I do like the CFPB. I am going to drop that in the comment section for you, because you can go there and complain on your creditors. You can complain about, swift changes that they're making. You can complain about the fact that you have, sent a number of letters over to the credit bureaus and they have not removed it, and they will advocate for you directly to your creditors. So sometimes when I can't get things accomplished in the most timely, effective manner, then I will reach out to the CFPB. So that is what the policy is saying, is that now they will now be handling your credit profile. While I like them in terms of being able to be, like a third party, like if I can't get it, done here, I can go over there. I do like that, but I don't like the idea of the responsibility of now, the credit, all of the credit information of, all of the Americans now, being in their hands. Their staff is not in place for it, and especially to make that type of change while we are coming back from a pandemic. I'm not with it. I'm not for it, sis. Now, there are some parts of the actual policy that I do like, and here are some of the things that they are going to that they are offering to happen in this policy. So even if they don't move it over, where now it's like, your credit is now managed by a government agency, I hope that some of these changes are put in place when it comes to managing credit. I do like these particular changes that they're proposing. Okay, so one of them currently, you can put your student loans in bankruptcy. You can do that. However, the requirements for your student loans to be dismissed under a bankruptcy are just very thin. The probability is so slight that to date, there's only 1 case that was like successful in getting their student loans put under bankruptcy. So through this particular policy, they are going to make the requirements for putting your student loans under a bankruptcy. They're going to make those lines a little bit less stringent, right? And then they will be very clear. That is what they're promising. That's what the language is, that they're going to make it, make the standards for your student loans to be dismissed under bankruptcy a lot more clear. So I do like that they are talking about that. They're also talking about the time in which they will report medical bills. And for me, because most of my clients are Latino or African American like myself, most of the times when I'm looking at my clients' credit bureaus, that is like the number 1 thing on there. When I'm looking at my clients' credit, that's one of the number 1 things that I see in the decade that I've been helping my clients improve their credit scores. Medical bills, those are at the top. And I'm not talking about, these high medical bills. I'm not talking about $5, $10, $15,000 destroying and detonating someone's credit report. I'm seeing $300 here, $400 here, $1,500 here. That's really having an impact on this person's ability to get a decent interest rate. And when you can't get a decent interest rate, right, even if you are approved, it dictates, how much money you have to spend to get inside of that house, how much money you have to spend to get inside of that car, how much money it takes for you to borrow money. That's what the interest rates are tied to. So the fact that medical bills are holding a lot of us in that, 500, 600, under that 600 range, I do think that is predatory. And I do think that is something that should definitely change. So that's one of the things that they're talking about, the reporting time. They're reducing that reporting time to 3 to 4 years, so that that doesn't habitually stop you from being able to gain access to money. And when you are gaining access to money, they are saying that it won't impede upon getting a decent interest rate. So I do like that. Um, Another thing that I do like about the bill, I mean, that I do like about the policy, I'm sorry, it's not bill yet. What I do like about the policy is that what is going to be reported, right? So currently, you have to have like an additional service in order for your rent to be included on your credit profile. You have to get like an additional service for that to be added. So one of the changes that will come with this policy is that that would be standard. So your rent, if you've been there 6 months, 12 months, 8 months, 24 months, that would be now a part of your credit profile. So if you think about, you've been paying your rent on time, you've never missed a payment. Now that is going to have an huge impact on your ability to gain access to money at a decent interest rate, because that is what is key. That is the goal, to be able to gain access to money. And when you do gain access to money, that you gain access to money at a decent interest rate. Okay. So that is one of the things that excites me. Aside from your rental history being included, they're also offering that your utility bill is going to be included. So here, South Florida, we have FPNL. So now FPNL would now be reporting, right? Unlike now, what happens here is that you can, it's good. You can pay it on time for the last 3, 4, 10 years, right? However, in the event that, you go 90 days, you don't pay it, listen, while they don't currently report on your good history, they will tell on you if you stop paying them. Yes, ma'am. If you get those lights turned off, they will report you 90 days late, right? And that will have an impact. So the fact that right now they're not reporting positively about you, but they can go and, report negatively about you is also very predatory. I don't like that. Also, your cell phone bill could now be included. Your telephone bill would now be included. All of your utilities with this new policy would be included, which is a way to kind of level out the playing field when it has, I've said it a few times this time. Let me see you drop it in the comment section. What is the goal? What is the goal, right? What are we always thinking about in order to close the wealth gap, right? One, getting access to money in the form of a loan, whether you're getting access to money to purchase a house, whether you're getting access to money to purchase a car, whether you're getting access to money to get a credit card, whether you're getting access to money to, to grow your business in the form of a business loan, right? When you gain access, that's the first thing, that's one of the number one ways that we can close the wealth gap, is giving us more access to money, right? And then when we gain access to money, the second step is what? Is that when I'm borrowing money, you're giving me access now to more money, but I'm not having to pay a ridiculous interest rate, because the items on my credit report really don't dictate that I have, negative credit, right? There's also, there is about 45% of Americans that don't even have like a credit score, right? Just because they're not there, because things like the rent is not included, right? Things like, utility bills are not included. And that's actually what they're paying on time. So think about that, right? Think about those changes and how they will have an impact. So those are some of the basic changes that is supposed to come with this policy. It looks like I got a question. Let me get a little bit closer because I can't see it. Oh, great. Yes. Good, but no teeth. Okay. I don't understand what you mean by good, but no teeth, Mark. Tell me about that. Okay. Drop it again in the comment section because I missed that one. Okay. So those are just some of the base level policy changes. Mark, you're my favorite. So please, one of my favorite lenders. So please send that comment back to me so that I can correspond with you, because I'm not really sure when you say there's no teeth. I'm going to assume great info, but there's no teeth. Okay, it's back again. So I'm going to make the assumption until you clarify for me that when you mean no teeth, you mean that they're not really able to help you progress, right? So what I've seen, like in a few cases, I'll give you one where particularly I had a client that had a repossession on her credit profile, even though she had the title. She had the title to the car, but her lenders were still reporting to the credit bureaus that she had a repossession, even though when I was disputing, I was sending an attachment to her actual title. They still would not remove it. I had to get the CFPB involved, and they actually, acted as an advocate in the middle of it. And because that they were coming down on that particular lender, it was eventually removed from my client's credit profile. And that's not the first time that I've had to go there on their behalf. Also, there are some lenders right now that have some specificities where they're not supposed, they've made these agreements with their clients where they're not going to do these late payments and report them, even though they've went directly to, a client has went to them and said, hey, I can't pay my mortgage at this time. And then there's an agreement, they sign it. And then what they do is they take, some of their payments, slap it to the back of the loan, which the client, once they understand that that's what's happening, they're cool with it, right? But there's also an agreement that the lender will make with that client and say, hey, listen, I'm not going to be reporting this to the credit bureau, even though you've made this agreement, and yet they still do it. So I've had to get the CFPB involved to make sure that those late payments come off my client's credit profile. So I do like them in that particular regard. So I don't know if that's what you meant, Mark, in terms of them not having any teeth, or maybe I'm not sure. So you'll have to come back with me for that. Okay. So that is some of the what some of the projections that's happening with this particular plan. What I do like about it, again, just to be a little redundant, is that if they do allow some of these non-traditional payments, which are very traditional, they call them non-traditional, but to pay your rent is in fact deeply traditional, paying your cell phone bill. That is really an expression of your credit worthiness. The fact that you do not let those things go off, you pay them on time without any impacts. Okay. Essentially, if this plan does not pass and they not use this as a way to, close the wealth gap by allowing some of these non-traditional things to be included, I always want to give you some base level tips to make sure that even when they don't widen, the eye for you to get into it, that you are making sure that you can do whatever you can to fit yourself inside of that, little square that they make available to you. By number one, making sure that if you borrow money, you pay it back. You pay it back, because every single time that you have a late payment, it's going to drop your credit score anywhere from 15 to 25 points. The range of that points is going to dictate what type of debt are you late on, right? So clearly, if you're going to be late on your car payment, you're going to be higher, in terms of having a late payment impacting your score, right? Just how many points that's going to happen. Doing something like looking at your utilization, right? That is something that you can do. You can simply get off of this live, go look at your credit report, and just look at the ratio between your balances, right? How much money they gave you, and then how much money you're actually using. And you want to have that anywhere between 7 and 30%. Now, if you're just trying to improve your credit score, maybe your first goal would be, let me get everything at 30%. However, if you don't really like paying interest like me, you can hold those cards at 7%. Typically, remember, when I'm speaking here, I'm always speaking in the position of preparing you for homeownership or preparing you for an investment property. So a lot of the criteria that I tell you for your credit is specifically for that. If you're looking to, use your credit to leverage in terms of building your business or just gaining more access to money, then you'll find that some of the recommendations that I give to you are just very stringent, because in the back of my mind, I'm preparing you for either purchasing, your first property, your second, or your third, and the guidelines for that are just a little bit stricter. Okay. Aside from that 7 to 30%, don't the big three already allow you to add utilities to your credit report voluntarily? Yes. To your question, right? You can get a special service. You can get a special service where you can say, hey, I would like for my rent to be reported to the credit bureaus. But with this new policy, you would no longer, that wouldn't even be something you would have to do. A lot of my clients may pay, an additional $8 a month, $15 a month to have their rent added to their credit report. But with this new policy, you wouldn't have to pay anything. You would not have to make any phone calls and say, hey, I would like for my rent to now be included, my utilities to now be included. It would just be standard, right? So therefore, if that's something that you're paying on a regular basis and you have good history with it, that's going to help your credit report, your credit score, be higher, just because you're paying that on time. Okay. And that's really the name of the game, right? Your ability to borrow money and pay it back in a timely manner. One of the easiest ways to operate with your credit is to humanize it, right? Think of your credit bureau as a person. Think about if someone wanted to borrow money from you. Think about that, right? If someone was coming to you, let's say if you live here in South Florida with us, well, the average cost for a house is $350,000, right? Let's say someone was coming to you and saying, hey, I want to borrow $350,000. what type of questions would you have for them? Would you want to know how long have you been on your job, right? And if you tell me how long have you been on your job, I want to know how long have you been on that job? Have you been on that job for 2 years? Have you been on there for? Because that's going to tell me that you have some type of stability, right? I'm also going to want to, aside from me wanting to know, okay, hey, you've been working on your job for this period of time, I'm also going to look at how you pay other things, right? How do you pay other things, right? If you have credit cards, are you using all of the money that's being extended to you? If you're using all of the money that is extended to you, then what's going to go off in my mind is like, maybe you don't have access to cash, right? Because if you have $1,000 availability and you're using 500, right? That might mean that you don't have any cash. And if I get the prediction that you don't have any money, then maybe I don't loan you any more money, right? So just think about that in that regard. Late payments, right? Again, those are going to drop your score, every single time. Some people think, oh, okay, I'm just going to get this 125 points. No, you're going to get 25 points every single time that you're late in January, March, April, however many times that you're late, you're going to get it every single time. So that's one of the number one things that you want to stop doing is having any late payments. Okay. Put those things on auto payment. All of my credit cards are on auto pay for the minimum. I go back in and I'll pay them. Some of my credit cards, I'll pay them twice a month, right? Just because I pay mine on the statement balance, right? Because that's the number that I want to go over to the credit bureaus, right? So I may pay them twice a month, but I have them on auto pay just because my life can get very busy and I don't want my mind to slip over a $25 payment and then have my credit score drop over $25. The money is sitting right there. It's just that I forgot. Maybe I was on Facebook. Maybe I was taking care of my children. Maybe I was managing my business. And I don't need a whoopsie to have my credit score to drop, right? Because what my credit score reflects is my ability to borrow money at the lowest possible interest rate that I possibly could. All right, so if there aren't any more questions, I'm gonna pick this conversation up on IG because I think there's a few folk that follows me there and not here. But if you have more questions and you didn't get them in tonight, you can follow me on IG. Next week, we're going to be talking all about how to get into commercial real estate. So if you have any questions about getting into commercial real estate, you can go ahead and email me those questions because my boss babe has helped tons of people that look like you and I get into commercial real estate. So if that's something that you have on your vision board or in the back of your mind, ask those questions so that your thoughts can start to get movements. And when you get movements, you get money, honey. All right, so if you haven't read my book, 10 Things Every Woman Should Keep in Her Purse, you can go to www.personempowerment.com and grab it. If you like these conversations, but you wish that you had some notations, make sure you join my email list because what happens is I always send out all the tips and the points for you to put in place. Until next time, do something that's going to add value to your purse or your wallet.